Over the last few days, one headline has been exploding across social media, news blogs, and comment sections everywhere. A possible $2,000 stimulus check in 2026. And if you're feeling a mix of hope, confusion, and skepticism right now, you're not alone. People are asking the same question over and over. Is this real? Is the government actually sending out another check? And more importantly, would you be one of the people who gets it? Because let's be honest, prices are still high. Rent is eating up paychecks. Groceries cost more every single week. And for millions of Americans, especially seniors and working families, it feels like the pressure just never lets up. So when you hear $2,000, it grabs your attention. It feels like relief. It feels like a lifeline. But before you get too excited, there's something you need to understand. This is not a simple yes or no situation. This is not a guaranteed check for everyone. And this is definitely not what many viral posts are making it sound like. Some people may qualify, others may not. And the reasons why might surprise you. In the next few minutes, I'm going to break down exactly where this idea is coming from, why it's being discussed right now, and who could realistically be first in line if this becomes real. Because what happens next could impact your income, your benefits, and your financial plans for the next 2 years. And trust me, the truth behind this story is far more important than the headline alone. Now, let's talk about why this story is even on the table in the first place. Because I need you to understand something. When you see people online screaming, $2,000 stimulus checks are coming in 2026, it sounds like it just appeared out of thin air, but it didn't. This conversation is happening for a reason. And once you see what's driving it, you'll understand why this rumor won't die, and why lawmakers are quietly paying attention. Here's the reality. Even though the economy looks fine on paper, a lot of Americans are not feeling fine at all. If you're watching this, you already know what I mean. Groceries are still painfully expensive. Gas goes up and down, but it never feels cheap. Rent in many areas is still out of control. Insurance premiums are climbing, and basic household bills have turned into a weekly stress test. And that's not me being dramatic. That's what the numbers show, and it's what real people are saying every day. Millions of families are doing that same thing where you check your bank account and you feel your stomach drop. Now, let's zoom out for a second because this part matters. The federal government has been watching a few warning signs that keep flashing red. One of the biggest is consumer debt. Credit card balances have been climbing, delinquency rates are rising, and more people are using buy now, pay later just to get through regular life, not luxury purchases, regular life. Food, gas, medicine, utilities. And when that happens across the whole country, it creates a bigger problem. Because when households run out of cushion, one unexpected expense can trigger a chain reaction, a missed payment, a late fee, a higher interest rate, a lower credit score, and suddenly you're not just stressed, you're trapped. Now, why does Washington care? Because when the average person can't spend, the economy slows down. And when the economy slows down, businesses pull back. Hiring slows, hours get cut, layoffs start, and then the government ends up spending even more later to respond to the damage. So here's the truth. Sometimes stimulus isn't about generosity, it's about preventing collapse, it's about maintaining stability, and 2026 is shaping up to be one of those years where stability becomes a serious political and economic obsession, because something else is happening behind the scenes. A lot of government programs are facing pressure all at once. Social Security is under strain, Medicare costs are climbing, state budgets are tightening in some areas, and the cost of living continues to squeeze people who are living on fixed incomes. And listen carefully, because if you're on Social Security, SSDI, SSI, or even if you're a working person supporting someone who is, this part affects you. When the cost of living rises, Social Security recipients technically get COLA adjustments, right? But what many people don't realize is that COLA doesn't always match real life expenses. COLA is based on a specific inflation measurement, but your life isn't measured by some government index. Your rent doesn't care about CPI. Your grocery bill doesn't care about CPI. Your medical copays don't care about CPI. So even when Social Security goes up a little, people still feel like they're falling behind. And that's not a small issue. That's a national issue because tens of millions of Americans depend on these benefits. Now, here's where the stimulus conversation gets interesting. The reason people keep talking about a $2,000 check isn't because someone randomly made it up. It's because the political conditions that create stimulus checks are starting to show up again. Let's talk about those conditions. Condition number 1 is public pressure. When people feel like they're working harder but getting less, frustration rises fast, and the government knows that frustration turns into political consequences. Condition number 2 is economic slowdowns or warning signs. Even if the headlines say things are stable, lawmakers see deeper data. They see household savings rates. They see credit stress. They see wage gaps. They see housing affordability dropping. Condition number 3 is targeted relief proposals. Because here's what changed since the pandemic years. Back then, stimulus checks were broad. A lot of people got them. But in 2026, if relief happens, it's far more likely to be targeted. That means not everyone. That means categories. That means qualifications. That means income limits. That means benefit status. That means who's considered most impacted. And this is exactly where people get fooled online, because social media loves to spread the fantasy version, the version where everyone gets $2,000 automatically, the version where you just wake up one day and a check appears. But that's not how these things work. Now, I'm going to say something that might make some of you uncomfortable, but it needs to be said. In Washington, when they talk about payments like this, they're not talking about helping everyone equally. They're talking about solving a problem. And the problem, in their eyes, is that certain groups are getting hit so hard they're falling behind faster than others. So if a $2,000 payment is seriously discussed for 2026, it's likely being shaped around groups like seniors living on Social Security, people on SSI and SSDI, low-income households with children, workers earning under certain thresholds, and possibly certain communities or states facing higher cost spikes. Now, before you get too excited, remember this. Discussion does not mean approval. A proposal is not a guarantee. And a headline is not a law. A lot of ideas get floated to test public reaction, and some of them go nowhere. But here's why this story matters. Even when a stimulus idea isn't finalized, the fact that it's being whispered about means something bigger is happening. It means the government sees pressure building, and it means something could be coming, even if it's not exactly what people expect. Now I want you to think about this next part carefully, because when people hear $2,000, they think it's just free money, but policymakers don't frame it that way. They frame it as economic relief, consumer stabilization, support for vulnerable Americans, temporary assistance to reduce hardship. And those phrases usually come with strings attached. That's why in the next section, the most important thing we're going to talk about is eligibility. Because if this becomes real, the biggest shock to most people will be this. Some people will automatically qualify, others will be excluded, and some people will think they qualify, but they won't. Because if a $2,000 stimulus payment does move forward for 2026, eligibility will be the dividing line. Not headlines, not social media posts, eligibility. And this is where most people get it wrong. Let's start with the group that keeps coming up first in these discussions, seniors. Specifically, Americans receiving Social Security retirement benefits. Why them? because they're living on fixed incomes in a high-cost economy that keeps changing faster than their checks do. Lawmakers know this, analysts know this, and the data shows seniors are among the hardest hit by rising food, housing, and healthcare costs. If targeted stimulus becomes reality, Social Security recipients are very likely to be at the front of the line. But here's the part people miss. Not every Social Security recipient would automatically qualify. Income still matters. If you're receiving Social Security, but also pulling in higher outside income investments or pensions, that could push you out of the eligibility range. This isn't about age alone. It's about financial vulnerability. Now let's talk about SSDI and SSI recipients. This group is often discussed alongside seniors, but for a different reason. People on disability benefits face unique challenges: limited earning ability, rising medical costs, strict income rules that already keep them living close to the edge. In past relief efforts, SSI and SSDI recipients were included because their benefits don't always adjust fast enough to real-world inflation. And if you're in this category, a one-time $2,000 payment could be framed as temporary support to offset cost pressures. But again, there are limits. SSI has strict asset and income caps. If those limits are exceeded, eligibility could disappear. That's why understanding how payments are structured matters just as much as whether they exist. Now, let's shift to working families. This is where things get complicated. Many proposals that get floated behind closed doors talk about income thresholds. Households earning below a certain level could qualify. Households above it would not. And here's the frustrating part. That cutoff is rarely obvious. Someone making $40,000 might qualify. Someone making $60,000 might not. Two households with similar incomes could be treated differently based on filing status, dependence, or location. And yes, having children often changes the equation. Lawmakers consistently prioritize households with dependents because the economic ripple effect is larger, more mouths to feed, more expenses, less flexibility. So if targeted relief becomes real, families with children, especially single-parent households, could be strongly favored. Now let's talk about who may not get anything at all. This is the part no one likes to hear. Middle-income earners who don't qualify as low-income, but who also aren't wealthy, are often the most overlooked group. They make too much on paper, but in real life, they're drowning in bills: high rent, student loans, childcare costs, healthcare premiums. Yet in stimulus formulas, they often fall through the cracks, and if that happens again, it will frustrate a lot of people. Now, there's another factor that could determine eligibility: your tax filing history. If you didn't file taxes recently, if your information isn't up to date, if your direct deposit information is outdated, that can delay or even prevent payments. And scammers know this, which is why this moment is dangerous. Anytime stimulus talk starts trending, fake websites pop up. Fake emails, fake texts claiming you need to verify your eligibility. Listen carefully. The government does not ask for your bank information through random messages. If you're asked to click a link or provide personal details, that's a red flag. Now let's talk about timing. Even if something is approved for 2026, that doesn't mean money shows up instantly. There are votes, budgets, agencies, distribution systems. Checks could go out in phases: direct deposit first, paper checks later, and some people could wait months. That waiting period is where panic spreads. And that's why preparation matters. So what should you do right now? Do not spend money you don't have. Do not assume anything is guaranteed. Do not fall for viral claims promising exact dates. What you should do is stay informed. Make sure your tax records are accurate. Make sure your mailing address is current. Make sure your expectations are realistic. Because here's the truth. If a $2,000 payment happens, it will help some people significantly. But it will not solve everything. It's a bridge, not a destination. And the people who benefit most will be the ones who understand the rules before the money arrives. Now, we're not done yet, because the biggest question still hasn't been answered. What happens next? And how fast could all of this change? Now, here's the most important part, and I want you to hear this clearly. Nothing is final yet. No checks have been approved, no dates have been locked in, and no one should be promising you guaranteed money in 2026 right now. But the fact that this conversation is happening at all tells us something big. Pressure is building. Lawmakers are watching the economy closely. Agencies are preparing for multiple scenarios. And if conditions tighten further, decisions could move fast. That's why the smartest thing you can do right now is stay informed, not scared. Keep your information up to date. Follow real updates, not viral rumors. And don't let false headlines push you into bad financial choices. If relief comes, you want to be ready. And if it doesn't, you want to be prepared anyway. You're not alone in this, and clarity will come. So make sure you're subscribed, stay informed, and stay focused. Because when real news breaks, you'll hear it here first.